Hey, what's going on? It's Flexing Joe, and this is take number 37 to try to record this video. I want to talk to you about meta puts that I took. I took the 625 puts, they were 0 DTE, and I entered for $250 per contract, and I scaled out of the remainder of my position for $966 per contract, nearly quadrupling my money in just a short period of time. So, let me break this trade down for you, explain to you why I took this trade, how I managed it, and what my targets were. All right, now that we got all that mumbo jumbo out of the way, let me break this trade down for you. Let's start with this gap right here, okay? So this gap is created when the market on way back here, January 21st, closed right here at 613.05 and it opened the next day at 629.35. I've been studying these gaps for about 4 years. I got a lot of experience with them. And when a gap is created that's this large and then ultimately sits out here for a really long period of time, right? You look at all these days that goes by with one tap, a second tap, a third tap right there, and then a fourth one where it goes a little bit lower. Now here we have the fifth attempt for this gap to hold. So when gaps sit out there for a really long time, I think, hey, there's a good chance that they're going to be filled. I don't know what that was that just dropped, but it sounded quite loud. We'll find out after this. Anyways, we'll continue on. The market was in a really bearish stance, right? We were under the previous day's low. We were under the previous day's close. We actually had gap down from 637 to right here at 623. So we had a $14 gap down, right? We were inside of this unfilled gap when we gapped down. We made an initial move down and then we pulled back where to the other side of this gap nearly perfectly. Now, what mistake did I make? I didn't think we were going to pull all the way back here. I thought because we were here, I should enter in here to go lower because once I saw this, I felt really confident that we were going to fill this gap. And we did. So I was right. However, what I did wrong was I entered in here and I didn't actually honor my risk. When we started to make this big shove up, which you can see on the 2-minute chart here, how this was just a massive pump up here for no reason whatsoever other than to shake Joe out of his trade and then to come back down, right? I was like, oh, shoot. So I jumped out up here, of course, bozo move, and then I had to re-enter in here. But I like the re-entry. The re-entry was pretty strong. And actually, in hindsight, it might have been better to just wait for this anyways, because at least here I had the 2-minute EMAs that were flipped. And if we go to the 5, see the 5 never crossed back bullish, but you know, I typically stay on the 2 and the 10 anyways, but I also do look at the 5. So I still felt really confident. I don't hate this entry. What I hate about this trade is that I let myself get swiped out and didn't just like stick to what my full risk was. I really thought, oh crap, right? Because at the same time, the market was also pumping up. So I saw the market pumping, I saw VIX dropping, and I thought, oh man, I need to get out of this trade. So I re-entered in here, and then I scaled out here for my first scale for $150 per contract. Now, that brought me back to break even on the day, okay? So I took the small loss, then I was at $150 per contract profit here on part of my position, break even stop, no matter what, I was gonna be break even for the day. That's great. Quickly, the trade continued to work in my favor, and I scaled out here for $250 in profit per contract. That's a 100% gain on these cons, right? Scaled out down here for $500 per contract. That is a 200% gain on this. So that means I went for $250 here, $750 there. That means I tripled my money in just about 40 minutes, right? Pretty awesome Friday, if you ask me. And then we continued to move down. I continued to move my stop down. Once I took this scale here on the remainder of my position, my stop was around here, around the VWAP and 20-minute EMA. Sorry, 20 period EMA. And then we continued to lower. I continued moving the stop down, right? We re-tapped the 20 EMA and the golden zone of this gap. Now, so I watched the golden zone of the gaps too. We pushed up, we came down here. Oops, we based in it. We moved this way and then we moved lower, right? As we continue to move lower and we continue to reach my final objective, which was hitting this right here, I moved my stop down a little bit tighter. We're going to go to the 10-minute chart because that's how I was managing my stop. When we made this move down and we were oh so close to filling that gap, my stop was here, and that's why you see that I got taken. So I exited the position there. I'm still very happy with how this trade went. Ultimately, if this had not been a 0 DTE trade, I probably would have left my stop a little bit looser, trying to get the ultimate objective of going down through this gap, which we did. But you know what? We were getting later in the day, and theta decay, is starting to take effect. And even though these puts were $10 in the money, I just didn't want to sit around and wait and see how much I had to risk on the options contract in order to be right and see, are we going to fill this gap, right? Because at the end of the day, making money is more important than being right on what the market does, right? Because nobody controls what the market does. So if you want to learn more about trades like this, if you are interested in learning how to trade, please click the link in my bio. Join my Discord community where I teach traders how to find and capture moves like this. Thanks for watching. Please don't forget to like and subscribe, and I will see you in the next one.